Welcome. You're listening to the Best of Investing on News Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hahn of Pacific Private Money, California's fastest growing private lender. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. And the vacations are free. Their only request a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Summer's around the corner. Actually, it's just around the corner, so check them out. And today's trivia theme is medium hard baseball questions. So for all you baseball fans out there, these are ones a little bit harder than the average bear. And our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. Quick reminder again, World Wraps in Corte Madera is still and Santa Clara is still giving our listeners a free smoothie if you purchase a wrapper bowl by mentioning the Best of Investing. And today's guest is Russell Rosner. Did I pronounce that correctly? Rosner?
Yes, you did.
Okay. Mark, why don't you introduce Russell?
Absolutely. So today the theme of our show is going to be, we're going to be talking mostly real estate and financing. And Russell Rosner is actually a good friend of mine. He's the current president of Equity Coalition, which is a private lender in San Francisco. They specialize in private mortgage loans and offer deeds of trust investments to private individual investors. Russell's got 15 years of real estate finance experience. He co-created 2 mortgage pools with Capital Alliance, helped raise over $60 million through private investors, broker-dealers, pension plans, real estate private equity firms, and registered investment advisors.
Holy smokes.
I know. His company currently specializes in providing excellent returns to their investors, mostly in the forms of deeds of trusts. He has unique real-time understanding of the Bay Area distressed real estate markets because he works with many of the biggest buyers of foreclosed homes at the Bay Area county courthouses. So Russell, welcome again to the Best of Investing.
Thank you.
Hey, so let's talk about the current state of the Bay Area distressed housing market. How do you see it?
Well, since I do have a unique perspective on the market because my borrower clients are buying, in many cases, 10, 20, 30, even 50 houses a month,
Wow.
they're constantly giving me feedback at the courthouses. And essentially, what I'm hearing right now, and maybe you can say you're here first, is that over the last 4 months, my borrower clients are getting very frustrated because prices are going up. And they're not being able to buy properties at the levels they were buying 4 or 5 months ago.
Because?
There is a supply and demand curve. And I believe that the inventory in the Bay Area is finally starting to thin out. And essentially, with that situation going on right now, many of my clients are looking at buying rental property because rental properties are still going to work whether the market's going to go up or down. So from the standpoint...
Well, I can explain that for a little bit.
Okay.
Give us the different scenarios. What happens if it goes up? What happens if it goes down? Why is rental property do well in either case?
Well, of course you don't want the market to go down too much. But my point really is that from the standpoint of just using common sense, if you've got a property that you're going to hold for a while and you're not too worried about the market fluctuations and you've got good rents, then you're going to be covered whether the market moves upward or down.
Absolutely, absolutely. It's funny because we've talked about that in prior shows, trying to theorize as to what's going on with the shadow inventory and why are the banks not releasing inventory the way they were in, say, 09 and 10 and even for the most part of 11. Here we are in 2012 and we supposedly have millions and millions of distressed homes where the homeowners are not making their payments. Some of them haven't made payments in 2, maybe even 3 years, but the banks aren't foreclosing, and therefore we're not seeing that investment opportunity come on the market. And it just, do you have any kind of theory as to what the banks are thinking and what's going to happen with that shadow inventory?
Well, the banks have been releasing the properties on a very slow and steady basis, because if the banks release them all at the same time, you would have a huge market crash.
Yeah.
Sure.
Right? And so, from the standpoint of the courthouse steps, there still is a steady stream of property coming out onto the courthouses right now as we speak, and those properties are essentially coming from the banks.
I wonder if one bank tells all the other ones, look, keep your inventory, and then they just go ahead and they put theirs on them.
Well, they definitely have certain their failure to release more inventory certainly played a part in the so-called hitting the bottom and maybe even now recovering a little bit, because there's a lot of people out there saying, we're now looking ahead to the real estate recovery, and then there's others that said, no, wait a minute, we still have a jobs problem, we still got a deficit crisis, we still got 7 million, I don't know, the number changes every time I hear it, in underwater homes in the country. So there's no real estate recovery. It's a false recovery created by the banks trying to protect their downside. What do you think about that, Russell?
Well, I think that's your theory, and
in fact, he just made
I don't know
that
that
up.
it's my theory. I don't know. I'm grasping for straws here sometimes. I mean, I told a
Sure
couple
sounded
shows
good.
ago we talked to some. Sometimes I hear some experts talking about the real estate market, and even then no one seems to really know what's happening or what's going to happen. They all have theories.
Well, yeah, you keep reading about a possible another recession, right? I mean, the main thing is the jobs still really aren't there, and if confidence is down, then employers are just not going to hire that many people.
well, yeah, I do have a perspective from the standpoint of what's happening right now, and that's the best I can do, because I don't have a crystal ball about what's going to happen in the future.
You don't? Why
I wish I did.
Why do we have you on the show? No, I'm just teasing.
But I mean, this kind of segues into an interesting concept, which is a lot of people don't think about the distressed Bay Area real estate market from the standpoint of it being two different markets. You have essentially people that are fixing and flipping, and then you have people that are buying and renting and holding. And if you look at the Bay Area as a whole, the counties that are closest to the coasts have a lot of fix and flip activity, and the counties that are in the East Bay have a lot of buy-hold activity. And you're probably wondering why. Well, if you think about it, you can't buy a property in San Francisco or in Silicon Valley for cheap enough to make it a good rental. So the only real opportunity right now is to flip. However, in the East Bay, you can buy properties for, in many cases, amounts that where the holding costs of holding a property are going to be half of what the actual rents are.
But in San Francisco, how much availability is there to actually fix and flip? Because I would think that there would be, unless something is absolutely dilapidated, there's probably too thin a margin.
Well, there isn't a lot of activity going on in San Francisco.
Okay.
You hit that right in the head. I'm just saying, as a whole, there are two markets, and there's less activity in the I guess the coastal communities.
Okay.
But I still do get deals from time to time in various cities in that area.
Oh, okay. And now this is a poignant question here, because both of you are kind of in the same business. And I asked Mark
Very,
about
very
this
similar,
earlier. Very
yes.
similar. Okay. So Mark, why don't you tell us what you think is the difference between your two businesses?
Well, Russell has created over many, many years relationships with lots of different funding sources. And so what I tend to specialize in with Pacific Private Money is we have a very kind of a small box of loans that we like to do. They need to be local in the Bay Area. We like to do fix and flip loans. We can do cash out loans as well. But generally speaking, we're making mostly loans on single-family residences. It's a very, we have a very short menu of loan products that we can entertain, and we're doing quite well with that small menu of loan products, because there's an awful lot of people out there looking for fix and flip money. But I get a ton of requests for stuff that I just have no idea where I might place that funding, and more often than not, when I call Russell about it, he goes, "Oh yeah, I know 3 guys that can do that." So he's, in many ways, he's been in this business longer than I have, and has a broader scope of in terms of menu and his services.
Okay. Thank you for that.
We can talk a little bit more about that.
We'll
in the
talk
next
about when we
segment.
come back from break. Going to do a couple of little promotions here. Let's see, the group WAR is supposed to be playing at Moore's Riverboat, which is located down the street from Lighthouse, which is one of our sponsors.
That's a classic place to hang
Isn't
out.
that,
and
isn't that
have
great?
fun.
Yeah, they're
Moore's
expecting a lot of
Riverboat.
people
Wow.
on June 24th at 5 p.m.
Delta.
And each week we're going to have a trivia contest, and the first person with the correct answer is going to win 2 free tickets. So here's this week's question. Who was the president of the Confederacy during the Civil War? The first caller with the correct answer is going to win 2 free tickets to war
I
at
hate
Moore's
history
Riverboat.
It was about war.
That's what, yeah, really. That's why I ask him, because I like to see you grimace at that. Okay, call 888-912-1190 and make sure to include your name and your email address and speak slowly and spell out each letter of your email address. Okay, and let's go to the first break. Here is the first trivia question. Name the and remember these are medium hard baseball questions. Name the oldest current baseball team that does not have a no-hitter by one of their pitchers. Okay. Now it's funny
You
because
said that's a medium hard
That's a medium.
question?
Yeah, I
It's
was
impossible.
going. No, I was going to say what are the 2 oldest teams, but the Mets, which surprised everyone because they've been around since 1962, had never had a no-hitter. Isn't that amazing?
Mhm.
But they just got one this
Yeah.
last week. So
Go Mets.
Yeah, go Mets. So which is the oldest team now? Because obviously you can't say the Washington Nationals because they've only been around for a few years. So the first 3 callers with the correct answer are going to win a free 3-day 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Name the oldest current baseball team that does not have a no-hitter by one of their pitchers. 888-912-1190. Make sure to include your name, email address, and remember to speak slowly and spell out your email address 1 letter at a time. And we will be right back. Excellent.
Awesome.
Okay.
Goes quick, huh?
It does. It
Yeah,
does.
It was really quick.
I want to make sure that you're going off of the questions that I did
You
after.
will. Yeah,
Okay.
yeah, that. So I just know it goes.
Those aren't really the talking points, dude. That's the older email. I changed it.
You did? You
Yes.
did. Oh, great, Edward. So, okay. No, I didn't
That's
see
the one you
that.
sent to me?
I didn't get a copy of that.
Yeah, yeah. So it's no big deal. It's fine. We're still kind of going with the
Okay,
flow
so what do
here.
you want to do on the next one? Do you want to talk about your products, or you want to go right into one of the questions?
Well, you know, I
Or
was.
both?
Well, these questions really are being answered as we speak right now.
Okay.
I just want to make sure that we have the right.
Oh, well, number 1 there is what type of borrower clients do you have? What's your specialty?
Right, and we went over that. They're the REO guys and the foreclosure guys, and then
We did number 2.
we did number 1, rental versus flip.
Yeah.
And is it better to buy rentals or flips in the Bay Area? I don't think that's really a question that needs to be
Yeah.
explored. But I think that number 3.
That's a good one.
Yeah. Why do they have to borrow private money?
Mhm.
And I think that. But before we do that, I would like to talk about sort of my menu of
That'd be
products.
good.
Yeah.
Yeah, okay.
But before I do, can I have some water? Is that-
Yeah.
Yeah, right behind you. In fact, I was going to thank you for. I
Yeah.
remembered it was while I was taking a sip, and I remember during the break to tell Russell to
Yeah.
grab some water. You're watching me sip it there, and you're going, and it just like psychologically, your throat's going to dry
Exactly,
out.
exactly.
Well, you could, you know what? If you open your mouth, I could squirt this in. I'm a good shot.
And I have no idea what the baseball questions are, but I do know Jefferson Davis.
Yes, that is correct.
Did you know that, Mark?
No, I did not know
You did not
Jefferson
know
Davis.
A lot of
Davis.
people are probably going to answer Robert E. Lee.
Yeah, right. That's probably
Oh.
what I.
A lot of people are
Yeah.
going to do that.
So and then you've got why do people have trouble qualifying for financing?
That's correct. And then what type of loan products are out there for these types of investors, which are the guys doing the foreclosures. And then the difference between doing an investment in a rental versus a flip, although
Yeah.
that might hurt you a little bit, but
Yeah.
you're okay with that. So
Mark is a true team player.
that's good.
All right, ready?
Yep.
All right.
Commercials have run.
Yeah, exactly. And here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hahn from Pacific Private Money. When we get to the first commercial break, we asked this trivia question. Name the oldest current baseball team that does not have a no-hitter. Anyone?
I have no idea.
And if you
No idea.
answered the Seattle Pilots, you are incorrect. But it is the San Diego Padres. They've never had a
California
no-hitter.
team.
Wow.
California team, yeah. And oh, by the way, the other special promotion we had about the group War playing at Moore's Riverboat, we asked this trivia question: who was the president of the Confederacy during the Civil War? Russell, I think you know the answer to that.
That would be Jefferson Davis.
It was Jefferson Davis, not Robert E. Lee. And we are in the studio with Russell Rosen.
Rosner.
Rosner. What did I say?
Rosen.
Rosen? No, Rosner. Don't you? I know your name.
I think so.
I'm just teasing you. Okay, Mark, you want to ask him a question?
Oh, sure. Well, we were starting to get in before the commercial break about talking about the different types of products that Equity Coalition provides. And Russell, could you expand on that a little bit?
Yeah, I'd be happy to. I mean, we have quite a menu of products, and the main reason we do is that not only do we work with direct investors, but we work with hedge funds, we work with private equity groups, and we work with a number of organizations out there that are willing to do loans, larger loans, and loans outside of the Bay Area. So we have the ability to fund loans all throughout California. We also have the ability to do loans in Nevada and Arizona. And we can do commercial loans as well. So apartment buildings, shopping malls, that sort of thing.
Well, let me ask you, because you're talking about big borrowers there, why do successful companies with lots of cash and experience have to borrow money from private lenders and not the banks?
That's a great question.
Thank you.
Yes. Well, you know, it's very interesting that Mark and I just came back from the Mastermind Conference in Las Vegas, where some of the top producers in the entire United States, mortgage producers, were there. And we got to talk to a lot of these guys. And I talked with one individual and said, hey, you know, what kind of loans are you guys doing? Or what kind of loans are the banks doing? And the banks are essentially just doing two types of loans: owner-occupied refinances and owner-occupied purchases. Now, for the most part, private money guys like us like to do non-owner-occupied loans.
Sure.
And right now, the federal government has almost no loan products for non-owner-occupied properties. And that's the main reason.
Now, you include all commercial properties?
Not all commercial property. I'm talking about single-family homes.
Oh,
But the big thing that a lot of people don't realize is that Fannie Mae and Freddie Mac, which are two of the biggest buyers of loans out there from the big banks, will only allow a borrower to have 4 to 5 loans at a time. So if you want to have more than 4 or 5 rentals, you can't go anywhere else except to go to Mark or myself.
Is it also limited by dollar amount too? Like some of them
Yes.
say, you know, if you hit $5 million, you can't borrow anymore.
Yeah, I don't know what the general number is,
Okay.
but I know that the loan amount is capped at $729,500.
Yes.
So let's talk about why people have trouble qualifying for financing in the first place. You want to talk about that a little bit?
Yeah, I'd be happy to. So when I get a phone call from a borrower, I immediately try to get some information out of them before we take an application or spend any time. Because then this usually is not a conversation with a big borrower or an experienced borrower, but somebody that might just be getting into the business. So to start off with, there's this misnomer that private lenders allow for no money down or low money down loans, and that's not the case. If you want to buy a house, you need to have skin in the game if you want to essentially go into business with my company. Because if you're borrowing money from us, you're going into business with us.
Yeah, I remember there were some that would say we'll give you 120% loan. I mean, they were literally, it was ridiculous.
Well, banks were doing that. I don't know that private or hard money lenders were ever actually doing 100% financing, but
Or 120%. I mean, you're 115.
Ah, the
It was
good
like,
old days.
Yeah, good old days where you're actually like, I want to buy this, but first give me some money.
Yeah,
out
they
of it.
wax your car after that too.
Yeah, exactly.
You know?
Yeah.
But that essentially is one of the main problems, is that a lot of my new borrower clients don't have enough money down. Now, there's something called OPM, which is other people's money.
I've heard of that.
So I suggest to you, if you want to get into the real estate investment business in the Bay Area and you don't have any money, call your uncle or call up your best friend, and maybe you guys can go into business together that way. So that's the number one problem right there. The second problem is that often borrowers will come to us with a loan amount that is so small that it's not cost effective for our company to do it.
Sure.
And I'm not talking about $5,000, but you know.
What is your minimum? $50 or $100,000?
No, our minimum is $100,000, and really to explain why that is, there are fixed costs for our company to do a loan. We have to pay our admin staff, we have to do docs, we have to evaluate the property's condition and value, and it doesn't matter if we do a $50,000 loan or a $1 million loan. It costs us the same. So don't bring too small of a loan, you know, to us when you come.
Well, how big is your company? I mean, how many employees, or how big is your company?
We aren't too big, but we have a number of offsite folks and salespeople.
Yes.
So it ranges from 3 to 5.
Okay.
Yeah,
It's
and
kinda
then
nice and boutique.
that's right.
Yeah.
We're a boutique lender.
Nimble.
Another one is that borrowers will call us up and want to borrow to buy at the courthouse or buy at an auction.
Yeah.
And there's a problem with that. You know what it is?
A, they don't have enough money, and B, the title report.
Exactly. We have to protect our investors by getting a title insurance policy. When you buy at the courthouse steps, you're buying as is, and you don't have clear title yet. So usually it takes 2 to 3 weeks before you can get clear title. So you're going to have to buy all cash first, and then come to us.
Now,
Yes.
I got a scenario, though, that you might do it if they put up other collateral. Then you might do that, right?
You're right.
There you go.
You're 100% right. So you're thinking out of the box now.
That's what the boutique people do, right?
That's right. Another reason is that the borrower is buying an REO or a short sale and has made an all-cash offer. Now, let me explain what I mean. So a borrower will make an offer to a bank and say, I'm buying this all cash. Literally, I'm writing you a check for the full amount. Then they come to us and say, hey, can I get a loan for that? Now, you might think, oh, no big deal. It's a white lie. But the problem is that when the banks see that they're bringing in a lender, they're bringing in financing, they typically rip up the contract and go to the next guy in line. So people out there, do not make all cash offers if you don't have all the cash.
I do get that question a lot, and you know what? There are a lot of people playing that game, and I've had deals fall apart because, you know, the applicant didn't let us know that, oh, by the way, the bank's expecting an all-cash offer, and oftentimes that's, you know, we're supposed to look at the contract when it comes in
Well, wait,
and look at that.
hold on, but from the bank's standpoint, I mean, if it's, let's say it's $1 million property that's a short sale for $700,000.
Right.
Okay. And your client, basically, the new owner, theoretically the borrower, is coming in with, I'll just say $300,000, and you're gonna come in with the other $400,000. From the bank standpoint, it is an all-cash offer. It's $700,000.
Not from a legal standpoint. And the banks are so worried about doing anything illegal right now that they would be breaking the law
Wait,
by
why is that
accepting
illegal?
the money.
Well, why is that illegal?
Because the contract stated all cash. And the definition of all cash is really all cash.
So they should go, so the borrower should secure the financing ahead of time and say, I'm buying this with this loan, but that doesn't sound as good as someone really coming in with an all-cash
No,
offer.
you're getting there. No, actually, the contract has an area on it where you can say, hey, I'm getting financing, and here's how much. That's all they have to do.
But that probably delays the acceptance from the bank of the short sale.
Well, you could also do a no loan contingency offer. I think
Yeah.
that, I mean, what the investors go all cash quite simply because they want to get the deal. And they figure
Right.
an all cash deal is more likely to get approved, just, you know, put a close all cash, low or no contingencies. And then you're coming in all of a sudden with a private money loan on the back end. And yes, the title company will require that, you know, that the contract be amended or an addendum to the contract. Oftentimes banks say, no thanks.
They just don't want to get involved in that.
Exactly.
Hey guys, we're going to cut to another quick commercial break here. Okay, so last week we asked a special trivia question again, where the winner won a free cake, bundt cake from Nothing Bundt Cakes. Have you checked them out? They're in Corte Madera at 415-924-2500. Ask for Nick, you get a 10% discount. They're literally the bomb. They're literally the best bundt cakes you've ever had. Okay,
Right on.
here was the trivia question. If you mix 75% potassium nitrate, which is saltpeter, 15% sulfur, and 15% carbon, what do you get?
A headache?
Nope.
No idea. Someone figured it out? One of our listeners?
Yeah, gunpowder.
Oh.
Ah.
Yeah, and I did that when I was a kid with my brother. It was kind of fun. Long story, so I won't tell it on
Who
the
won
air
that?
here. But I have all my fingers and toes, fortunately. Glenn from San Francisco, congratulations.
Well done.
Okay, cutting to our second commercial break. Here is the trivia question. Again, these are medium hard baseball questions. Of course, that's medium hard in my mind. Could be easy for some, hard for others. The A's, the Oakland A's, had 3 Rookies of the Year in 3 consecutive seasons. Who were they? And we'll give you an extra special thumbs up if you can name them in order and the year, but you don't have to. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. The A's, the Oakland A's, had 3 Rookies of the Year in consecutive seasons. Who were they? And I'll give you a hint. 2 of them were the Bash Brothers. Call 888-912-1190. Make sure to include your name and your email address, and remember to speak slowly and spell out your information for us, especially your email, 1 letter at a time, and we will be right back. Excellent.
Was it Vita Blue?
Excellent.
Vita
No.
Blue? No?
Jose Canseco?
Yeah, that's one of the Bash brothers.
And who was the other Canseco brother? Jose and...
Another Cuban.
Oh, yeah.
Vini or something.
Yeah, that's the only one I remember is Jose Canseco.
Yeah, but the Bash, no, Bash Brothers doesn't mean that they're
They weren't
actual
real brothers,
no.
yeah.
Yeah.
The other one I know you've heard of. So.
That went better because we're following my agenda there.
Yep.
Yep.
So we'll do like the trivia question. I'm sorry, no, there's an email question we normally do in the 3rd segment, which I'll
Okay.
answer, and then we can go right into continue on the topic of
Yeah, and then I'd like
private lending.
to segue into
Yeah, so give me because I can't really see what you got over there.
Sure. Okay.
Well, why don't we finish up with him before we do email?
Oh, okay, sure.
Yeah,
let's do that.
I only have 2 more reasons why people don't qualify.
Okay.
And then after that, I think that I'd like to talk about investing in deeds of trust and the difference between investing in a rental versus a flip.
Okay.
But I'm running out of topics. We have 2 more segments.
Yeah, no, well,
Yeah.
there's plenty.
Okay,
We'll
all right.
Yeah, because
We'll come up with
there's
stuff.
one. I just wanted sort of for fun, in case we needed some time, to talk about Facebook, a failed IPO, and then go through some other failed IPOs.
Oh, okay.
We're kind of just for fun to. We don't have to, but just in case we have some time.
So we'll repeat the question that you're answering and go back.
Sure.
Obviously. Okay, what was the question again?
Oh, the question is why do borrowers fail to qualify for loans?
Why do
You know,
some borrowers, yeah.
Right.
Why do some borrowers fail?
I'll
You'll
hand
do-
it over to you.
Okay.
Oh, I do have one product though that I'd like to describe that I didn't describe before, and maybe at the end of that I'll just jump in and describe it. Basically, what it is it's an equity line product for people that are buying in mass.
Oh, okay, that'd be exciting to
Yeah.
to go into. Okay.
So what was the question is why do some borrowers fail to qualify, or is it, what's the
Why,
actual question?
why do borrowers have trouble qualifying
Oh, why do some borrowers have trouble?
for loans?
Okay.
Yeah.
Got it.
Okay. Ozzy Canseco
Ozzy.
was the other Canseco, but that's not the answer. That was the answer to your question of Jose's brother. Excuse me. And away we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, my co-host. When we cut to the second commercial break, we asked this trivia question. The Oakland Athletics had 3 Rookies of the Year in consecutive seasons. Who were they? Anyone?
I know Jose Canseco.
Jose Canseco, he was the first, 1986, and after him, Mark McGuire. After
Ah.
him,
of course.
And then who played shortstop? Because he was 1988, Walt Weiss. I don't know if you remember that.
Oh, I don't.
No.
Okay. We're in the studio here with Russell Rosner, and Mark, you had a question for him.
Well, he was, Russell was in the middle of answering the question, why do some borrowers have trouble qualifying for a hard money loan? He was going through some of the reasons, and there were a couple of more.
Yes, there are a couple more, and this one is probably the main reason why folks have trouble qualifying. Now, this is typically for a refinance. However, we get a lot of refinances anyway. Now, here it is, dun da da da. The borrower thinks their property is worth more than it is.
Always.
No.
Really?
Always, yes. That's the bane of a refinance.
So everyone else's
request.
property went down 30–40%, not mine.
But not theirs.
It went up 10%.
Yes.
There you go.
Really, if I could help or at least give some advice to your listeners, please even just go to Zillow and look up your property. And if you think your property is worth $500,000 and all of the properties within 6 blocks of your property are selling for $250,000, it's worth $250,000. It's just simple math.
But what
It's
about
common
sentimental
sense.
value? I've got some nice pictures on the wall of my kids. Doesn't that help?
Well, maybe if you've got gold bars on the basement.
Yeah.
Well, people tend to think that, well, I've got better improvements, or I've got
Of course.
better this or better that, or, you know, but, you know, in this market, buyers really just don't care. It might
That's
have
true.
a small effect on, you know, what kind of offers you might get in a competitive market.
Well, and
but
certain things like swimming
it's not
pools might
significant.
actually be a negative instead of a positive
Exactly.
in some cases.
Yeah, and in some cases, I can tell you, I've had borrowers thank me later for, especially on purchases, for
Oh,
me
yeah.
dissuading them from purchasing the property at the price that they were going to buy it at, because we did an income analysis on the property. This is usually for commercial,
Yeah.
but still. So it does help to know the value of your property when you're going to buy or you're going to refi. And the final one is that, and it does have something to do with the last problem, the borrower is buying a property in an area where almost all of the sales are foreclosures. So they want to buy a retail property, a retail price property, in an area where all the houses around them are being sold at foreclosure.
And what price are they wanting to buy at?
Well, for instance, some people like to buy really nice, improved, and beautiful rental property that somebody else has already taken the time to improve and work on,
Makes sense.
and already rent out. However, the problem is that we have to protect our investors when we're going to sell a loan to our investors, and unfortunately, if all the properties around that really nice property are selling for less, even if it's because they're foreclosures, that still is an issue.
Okay, so you can't just look at the income and do a cap rate analysis to come up with a fair market value, because you're really concerned about all the other foreclosures around. Does that tend to believe that those renters would move out and then you couldn't rent it again, or?
No, it's really being stuck with a property and not being able to sell it for what you paid for it. It's a pretty common problem. I do want to say this though, that often this is not happening that often in the Bay Area. There's still enough retail trading going on. I'm talking about areas in like Sacramento and Fresno, and areas where there's a real high foreclosure rate. And one thing to mention is that when a private lender is looking at a loan, they're looking not only at, is it a good loan, is it a good house, is it a good borrower, but they're looking at 2 years, 3 years, 6 months down the line, are they going to be able to get paid out or paid off? And if all the
There
property,
always has to be an exit strategy.
there has to be an
yeah.
exit strategy, that's correct. So if everything around the property that's just been purchased is selling for half of what you just paid for it, it's not very likely that you're going to be able to refinance at a bank and have your property appraised for the amount that you needed to.
And that's the key, it's the appraisal process. You can't get it to appraise for the value that, even though you may have agreed with, buyer and seller have agreed to a price, if it doesn't appraise, that can be a problem, particularly for the exit.
Exactly. So if you actually don't have any of these issues, give me a call, and I'd be happy to help you. And to take a step back, I wanted to mention something about my larger clients that are buying 10, 20, 30, 40 houses a month. If you think about this,
That's amazing.
it is amazing.
30 to 40 houses. How can you do that much due diligence on, unless you're buying a whole block?
They have a lot of employees,
Oh, okay.
and they've been doing it for a long time. So to sort of make a point here, private money is great if you're going to buy 1 or 2 houses and then fix them up and flip them or rent them out. But if you're buying multiple homes and you're trading them, so for instance, if you're flipping them, if you have to, let's say you flip the homes every 120 days, so that's 3 times a year. You're taking the same pile of cash, you're buying houses, you're selling them, you're buying more houses, selling them, and so forth. If you have to get a private loan on a house each time that you sold it and you're going to buy a new one, well, instead of paying 3 or 4 points for your private loan, you're going to have to pay those 3 or 4 points 3 or 4 times a year.
Sure.
Now that gets very cost prohibitive.
So what does one do?
We have a product for folks like this. It's an equity line product. And what's really cool about it is that the borrower is able to secure an equity line. Now, by the way, this is a $1 million and up product because it's for experienced buyers who are already in the business. But once they've secured the equity line, what's great about it is that they can trade houses on and off the line, and all they pay is a $350 processing fee for each new house that they put on the line.
That's pretty cheap.
It is pretty cheap. So they're cutting down the cost of borrowing significantly.
How do they get that equity line?
Well, you know, it's going to be a little bit too difficult to explain right here.
Oh, okay.
But they
People
can
call you.
But they can go to my website, and the equity line is in the loan product section,
Okay,
which
what-
is equitycoalition.com.
And what's your phone number in case people need more questions?
Oh, sure. My phone number is area code 415-680-3454.
Excellent. And I want to go ahead.
Oh, I had another question for Russell, because we were going to talk about, we were talking off the air about investing in deeds of trust versus buying rental property, and you had some, you wanted to share some information with our listening audience.
Well, sure. You know, we were talking about our different companies and what we focus on, and Mark, correct me if I'm wrong, but I think you do quite a bit of business with people that are fixing and flipping.
Yes, absolutely.
And our company tends to focus more on individuals that are buying and holding and renting. And I just wanted to juxtapose the two in regard to, you know, investment products. You know, if you look at the at a loan that's put on a flip, that might be a very secure loan, and I think that you do great work and you have a great track record at your company. But if I'm an investor and I invest $50,000 at a 9% rate on a flip, and that house is flipped in 6 months, well, guess what? I've got to scramble for another loan in a month or, you know.
Sure.
And so the issue here is that your money is not vested on a long-term basis. It's going in and out of the market. Now, some people like the idea of being able to get their money back quickly. However, I'm more along the lines of feeling that it's best to have your money in a good property, and if it's a rental property, you have the rents to back up your mortgage payments should something happen to your borrower. And it's nice to be able to do a loan for 1, 2, 3 years. And just to make a point here, most of my clients that want to do rental property loans want longer term loans.
Yeah, I mean, 1, 2, 3 years is not a long time. It'd be one thing if you're like a regular bank doing 15 and 20 year, but you know, 1 to 3 years isn't that much.
The interesting thing about this industry of private lending or trust deed investing is that there are so many products out there for someone who wants to invest in a note to consider. So if you like the idea of being able to get your money back into your account and have the control of it every 6, 8, 9, 12 months, then short-term fix and flip products are a great way to invest. If you'd rather you know, have a 2 or 3 year funding commitment and not get your money back too quickly, because quite frankly you really don't want to spend that much time analyzing investments, then absolutely, and the 2 to 3 year note investments are the way to go.
Okay, tell you what, we're going to go to a quick special trivia question, go to break, and when we come back, we got an interesting email for Mark Hahn. Okay, here is the special trivia question where the winner is going to receive a free 2-night stay at the Ritz-Carlton Laguna Niguel. Americans buy enough of this to wrap around the earth 5.5 times. What is it? Now, here are the rules. You can't be a previous winner on the Best of Investing, and you need to email edward@bestofinvesting.com the answer by midnight tonight. And here, for the Ritz-Carlton Half Moon Bay, is located halfway between Los Angeles and San Diego. And the Ritz-Carlton Laguna Niguel sits on a 150-foot bluff with panoramic whitewater views of the Pacific Ocean and 2 miles of sandy beach. The resort is a reimagined surfside retreat that awakens guests' senses with its unique oceanfront setting and remarkable service heritage. As the premier destination for travelers who desire a playful approach to Southern California luxury, the resort features Raya, a restaurant concept of Chef Richard Sandoval, 180 Blue and Oceanfront Lounge, and Jean-Michel Cousteau's, ambassadors of the environment, offering one-of-kind eco adventures. Visit ritzcarlton.com/Laguna Niguel. And when we cut to we're going to the third commercial break. Here is the final trivia question, and again, it's regarding baseball, and they're medium hard questions. Okay, here, I think this one's a little bit easier if you remember this. This scandal involved a little leaguer whose team was disqualified because he was too old. This happened just a few years ago. What was his name? The first three callers, you're giving me the eyebrows, Mark. The first three callers with the correct answer. Obviously, you don't watch the Little League World Series.
I don't.
Okay, this is on the Little League World Series we're talking
I have
about.
girls.
Okay, that's right. That doesn't help. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Check them out. Call 888-912-1190. That's 888-912-1190 to answer this question. This scandal involved a Little Leaguer during the Little League World Series a few years ago whose team was disqualified because he was too old. Who was he? Make sure to include your name and email address, and remember to speak slowly and spell everything out for us, please. And we will be right back. Hey.
Yeah, good radio voice, Edward.
Well, thank you.
Yeah.
You're doing great.
Yeah. Ah.
I know, it's like, I talk so much during the week. By Friday, it's like,
Oh, I
I hear
know. Live on the phone.
yeah.
Yeah, no, I can imagine this being even better. I mean, Mark asked me while we were at a conference drinking beers.
Drinking beers at a conference. How come
yeah.
you didn't invite me?
Beer and shots.
Beer and shots. That's when all the secrets
Oh,
come
yeah, I
out.
felt like shit yesterday.
Oh,
my
yesterday
God.
morning,
Oh.
I think I had 5 or 6 beers. I lost count. But I mean, that's not a lot. I
No.
used to drink a 6-pack every day after work, and barely felt it. But I guess as you get older and you don't drink as much.
Yep.
Yeah. That's true.
I hope you're not recording that.
No. Well, you know what
What was
happens?
my question again?
The email we received from a listener was, do you ever negotiate with your borrowers, or do you have a set interest rate?
No.
And does anyone know the question, the answer to the question?
No. No
Rusty.
way.
Yes, they're Baseballs. When I say the name, I bet you'll remember.
I think it was a black guy.
No, he
No?
wasn't black.
Or Hispanic, like Cuban?
Yes.
Cuban?
Yes.
Okay. Yeah.
See? He'll know the name as soon as I mention it. Oh, let me figure it out.
Yeah. I would like the opportunity, at least at the end, to once again state my phone number, my email address, and
Absolutely.
my company website. Yeah.
Remind me before we. Usually, what I do is I go to Fox for the day. So.
So I'll go like this. Will that remind you?
Oh, why are you putting your fingers on
Putting your fingers up your nose.
Okay.
KKSF. KKKSF.
Absolutely. No, I love KKSF.
Yeah.
But-
It's like the old
but-
Fox News Radio.
But what happened?
Strong and good.
On the FM, they got taken over by who? Weren't they on?
No, AM 910, but they
Oh.
used to be KNEW, Fox News Radio.
Yeah.
And then what's interesting, what we're getting a big coup is KGO let
Mm.
go of
Like
everybody
fired
except
everybody.
for fired everybody except for Ron Owens.
Oh,
So
wow.
we get all kind. I usually average about 30 calls per show.
Wow.
Because of the questions and sometimes specifics like, hey, that guest you had on. I had a guy literally email me and say, 6 months ago, you had a real estate attorney on, and I can't remember his name.
Oh.
And I remembered exactly, he said, and he talked about blah, 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 and I was able to pull it up, and, and the podcast will stay up
Mhm.
for a long time.
Forever.
Yeah,
Forever.
forever, yeah.
Cool.
So, if people
Do a bit.ly link
Yeah,
right
I
there,
see.
Or upload the thing to your own website.
Can they download it on the iTunes or whatever?
Yeah, I think
Oh,
they-
that's
Yeah,
awesome.
That's my half my iPhone is MP3s.
Yeah, mine too.
Also, there's a
People
website
talking.
called DAR.FM,
Uh-huh.
and we show up on that, and
Uh-huh.
they can just record it every week.
Ah.
if
So,
they want.
so hold on. KKSF. Okay.
It's split.
No, I'm just thinking. Oh, KBLX was the one I was thinking.
Oh,
okay.
103.7.
Yes.
The Quiet Storm. Remember them?
Yeah, they are now oldies.
Now they're oldies.
Yeah.
Yeah. I won a trip to anywhere I wanted to fly in the world.
Whoa.
Yeah, they had their go anywhere you want in the world contest, and it's really funny because I won while I was at lunch, but a client of mine called our offices and said, "Hey, Russell, call. You have an hour to call." So when I called them, they want to do it live, right? Make
Yeah.
it sound like you're excited.
Yeah.
And she's like, "So Russell, where do you want to go?" And I said, "I want to go to South Africa." And she said, oh, we don't go there. I'm like, I thought you could go anywhere you wanted in the world. She said, no, we only fly on whatever the airline was, and they only go to Europe, South America, and the U.S. So because I wanted to go to a bunch of, I wanted to go to Thailand after that. No, can't go there. But I finally.
Can I go to Los Angeles?
Right. But I ended up flying to the Galapagos Islands.
Oh wow!
So that ended up being
cool.
pretty cool.
How many minutes?
9 minutes and 12 seconds.
So it's okay. Slightly. Yeah, I thought we ran long on one of the segments.
Yeah.
So it's okay.
Okay, so we'll get into email time.
Yep.
And
And you want to do your
on
Facebook, or do you?
Yeah,
wanna-
because I'd like to try to get when we have.
Yeah, because after my email, we're not going to have really a lot of time for a
Right.
substantive.
Yeah,
you know,
and
real
I'd like to
estate
do
or
some other
economic.
than real estate. Just
Yeah, I don't mind.
like
If
to
you're
know.
gonna have me back, I'll be
Oh,
happy
yeah?
to. Yeah.
Yeah.
Okay. Good.
Yeah, we should talk about after the show if you have just a couple of minutes to talk about if you're interested.
Okay.
Okay. Because we've been doing this now for almost 2 years.
Mhm.
We've got about 15,000 listeners
Wow.
in the Bay Area. Santa Rosa to San Jose seems to be our main
Mhm.
hub, and then out to like Livermore. But because people stream this,
Mhm.
and sometimes the radio waves carry over the ocean,
Right.
we've heard from Honolulu,
Wow.
Oregon, Las Vegas, Lake Tahoe, and San Luis with this stuff.
That's amazing.
Yeah.
That's really cool.
It's pretty cool. All right, boys.
Yep.
Let's do it. Right?
Yep.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and our guest, Russell Rosner. And when we cut to the third commercial break, we asked the trivia question. This scandal, we're talking medium hard baseball questions. This scandal involved a little leaguer during the Little League World Series whose team was disqualified because he was too old. He was 14. That's too old. Who was he? Anybody?
No idea.
No clue.
Danny Almonte.
Mm.
Remember that? You don't remember the Danny Almonte scandal? Look it up on YouTube or Google. And Mark, we received an email from a listener that says, do you ever negotiate with your borrowers, or do you have a set interest rate? Sounds like someone wants to call you for a loan.
Ah, okay, a borrower question. Well, for new listeners, my company is Pacific Private Money. We make private money loans. You can call them hard money loans. And so, our task when a borrower calls and has a loan application is, first assessing, the viability of the loan. Is this the type of loan that we like to do, which we were talking earlier, that seems like 70% of the loans that Pacific Private Money is funding these days are purchase money loans for people who are buying, fixing, and flipping. And so our task is really to be a matchmaker between loan applications and our stable of investors, private individuals who live in the Bay Area who like to invest their money in notes that are secured by deeds of trust. So, our lenders are not Bank of America or any corporations like that. They're private individuals who use their savings, their IRA money, their self-directed IRA money to fund a loan. And so I can generally quote with reasonable accuracy what I think I can fund or what the pricing of a loan will be. So for example, if someone calls me and says, I'm going to buy, fix, and flip the property in Oakland, generally speaking, I can say with certain certainty that, well, I know I can do it at 12%
Yeah,
that is,
sure.
because it's, you're talking about a short-term loan, and Oakland still, for many lenders like Pacific Private Money, is a 12% town. And what I mean by that is, if you come over the bridge to San Francisco or Marin County, you could probably get that money at 11 or maybe even 10. So it really is a matchmaking exercise. And I do get borrowers who, maybe they say, well, I'm really interested in getting a single-digit interest rate. Can you get me something in the, low to mid nines? And then and generally I'm pretty honest with them. If I, after speaking with them and finding out what kind of borrower they are, what's their experience, do they have good credit, even though that's not a condition generally of funding, and where is the property, what's the neighborhood? Based on those variables and the fact that I know my investors pretty well, and plus maybe that week I got a call from one or more investors saying, hey, I'm sitting on a pile of money, I want to put it to work. And generally, if there's that kind of demand, maybe I can squeeze a little bit better interest rate out of them.
Well, let me make one correction. You said you're pretty honest about things. I'd say you're very honest.
Oh,
I
well,
hear,
thank
I
you
hear,
for that.
yeah, I hear from, I actually hear from some people who, say that, gosh, dealing with Mark is really great because he's very open. It's an open book. He doesn't bait and switch. Whatever interest rate he tells you is going to be really, really close. It's only for weird, extenuating circumstances, like the borrower didn't tell you something that might change.
Well, thank you for that, and I certainly like to try to keep that as my business style and practice. But it's not unusual. In fact, it happened to me this past week, where a borrower wanted a certain amount and a certain rate for a transaction, and I went to a sophisticated lender. I'm sorry, I went to a sophisticated lender because it was a larger loan amount than I typically do, and that lender countered the terms because I actually, I put it out there to my investor at the rate in terms and loan amount that the borrower wanted, and my investor, my lender said, I'll do it at this for this. So then I had to go back and
yeah, but you didn't guarantee that you were going.
No, I don't.
Yeah, I think
it's a best
generally I
efforts
should be able-
basis.
Yeah, exactly.
Everything's negotiable, right?
Yeah, absolutely. So, but you'll never know until you call. So if you're looking at doing a real estate transaction, whether it's purchase or cash out in the Bay Area on a residential 1 through 4 property, that's what we're doing mostly right now. Check out our website at pacificprivatemoney.com. That's all one word, of course, pacificprivatemoney.com. Or give us a call. We have a 415 area code. It's 415-883-2150.
And you can always go to bestofinvesting.com and check Mark out there. Shift subjects, guys, for just a minute here. Facebook's been in the news, just a little bit, with their IPO that's just kind of tanked. I guess there's no easy way to say that. So I'm wondering if it's going to be one of those failed IPOs. Now, the ones that I'm going to bring up here were during the .com boom, so you got to take that into consideration. But I thought these were kind of interesting. Do you guys remember Webvan?
Sure.
1999.
I bought stock.
Oh, sorry. I should have.
I'm so sorry.
Sorry about that.
I think at $45 too. We thought it was going to go up to.
Well, it came out in 1999. They raised $375 million, and it said it hit $30 a share. And in 2001, it went out of business. So 2 years later. Okay. Then there was one I don't remember this one called theglobe.com, and that was a forerunner to social media that went public in 1998. The price jumped from $9 to $87.
Wow.
And in August, let's see here, by August of 2001, gone. And here's another one, February of 2000, Pets.com. Remember that one?
Of course.
Oh, yeah, the sock puppet one.
That's a sock puppet.
that's
Exactly.
right.
They went public. 9 months later, they were out of business. Hoopers.
Well, I don't think anybody thinks Facebook's going to go out of business. So, how do you define a failed IPO? It opens up at 38, went quickly up to 45, and what did it, I didn't check.
27, but
27.
UBS Securities announced that they didn't want to announce that they lost probably hundreds of millions of dollars, and some of that had to do with putting in multiple orders because the NASDAQ couldn't get the executed trades enough. Kind of crazy. Again, Russell Rosner. Why do I keep doing that? Because I'm not looking at the paper. I'm sorry, you look. No. Russell Rosner.
No, in high school, they pronounced my name Rosner, Reesner, Roesner, so I'm used to it.
Okay. And again, how do people get a hold of you?
People can get a hold of me in several ways. They can call 415-680-3454. They can go to my company, the Equity Coalition, at equitycoalition.com, or they can actually send me an email, which would be rrosner, RROESNER.
Hold on, I'm writing this down.
Thank you. At equitycoalition.com.
Okay, and you promise that if I don't mess up your name, that you'll come back again?
I promise.
Russell
This has been a lot of
Rosner.
fun.
It has been fun, hasn't it?
Certainly.
Okay. And Mark, any last comments before we go to thoughts for the day?
Go Giants this weekend, and I hope for good weather. And it's the time of year where all the parades are starting and the festivals. I know the Novato Art and Wine Festival is today and tomorrow, and I'm going to go there right after the show.
Excellent. Okay, here are our thoughts for the day. Why does the sun lighten your hair but darken your skin? I thought that was kind of interesting. A little science question there.
Yeah.
And who is the guy who's brave enough to put the thin ice sign in the middle of the thin ice. You ever think about that? Maybe they do it by helicopter. They drop a sign that says thin ice.
Put it on a frisbee.
Or put it on a frisbee, exactly, that'll work. All right, tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Excellent.